Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. Now if you like our content, please don't forget to hit the like button. Also subscribe to our channel and click on the bell button to receive important financial updates at the earliest. Now, Citigroup is an American multinational investment banking and financial services corporation headquartered in Manhattan, New York. Here, we present 7 stocks which are their preferred budget plays. Now, please don't treat these stocks as blind buys. Please go ahead and do your own research. And the reason that they have chosen these stocks is because they think that the need for a case of populism is weak, and they expect the government to stick with fiscal prudence and a pragmatic budget in 2018. They expect the government to project the fiscal deficit at 3.2% of GDP in FY19 from 3.5% of GDP in FY18. Now, they expect action in individual stocks which are likely to get impacted either directly or indirectly by budget, which include stocks in cement, infrastructure, and electronics space. Now, the stocks and sectors to watch out for in the budget 2018 include themes which are related to rural focus such as autos. Also, they prefer public capex and spending on roads and affordable housing related sectors. Please watch this video to know more. Now, the first stock on the list is Bharat Electronics Limited, which is available at 176.90, and the stock was recommended by Citigroup at 176. The target price for this stock is 221 and the code for it is BEL. Now, the factor that you would have noticed is this stock has been on the radar of almost all the brokerage houses and has been recommended multiple times in many brokerage research reports for the year 2018, also in many multi-bagger lists. Now, Bharat Electronics Limited is engaged in design, manufacture and supply of electronics product systems for the defense requirements as well as for non-defense markets. The company's principal products services include weapon systems, radar and fire control systems, and also communication systems. Now, if you were to look at the 1-year chart, you would see that the company has been a consistent wealth creator and has been on a consistent uptrend, but of late there has been some sort of a decline in stock price. The market cap is 43,464.17 crores, which means that the company is a large cap one. The EPS is 6.93, which translates into a price to earnings ratio of 25.53. Now, this is a bit less compared to the industry PE of 28.52. The book value is 30.56, which translates into an expensive price to book ratio of 5.79. The dividend yield here is decent at 1.27. The promoter holding percent is 66.72 and is pretty good, and the promoter here is the Government of India. The 52-week high is 193.40, whereas the 52-week low is 132.36. Now, this is a preferred play on the defense sector where the government is expected to increase its allocation. Now, the second stock on the list is State Bank of India, and the common minimum price here is 313.15. The price when this stock was recommended was 296, which means that the stock has already appreciated a decent bit. The target price here has been set at 400 and the code for this company is SBIN. Now, State Bank of India provides a range of products and services to personal, commercial enterprises, large corporates, public bodies and institutional customers. Now, if you were to look at the 1-year chart, you would see that it's been all over the place, and it's only when the PSU Bank recapitalization was announced that this stock saw a change in its fortunes and there was a massive spike. The market cap is 2,70,312.76 crores, which means that it's a mega cap. The EPS is 10.44, which translates into a price to earnings ratio of close to 30. The industry PE is 24.71, whereas the book value here is 181.61. The price to book is 1.72. Now, the debt to equity is 1.0535, whereas the return on equity here is 0.0177. The dividend yield here is 0.83, whereas the promoter holding is 57.46, which is average. The 52-week high for the stock stands at 351.30, whereas the 52-week low is 241.15. Now, with the PSU Bank recapitalization, these stocks could do very well going forward. Now, the third stock on the list is ACC Limited, and this is from the cement sector. Now, ACC Limited is currently available at 1726.40, and this stock was recommended when it was at 1844. The target price here is 2400, and the current market price is much below the price at which this stock was first recommended. Now, ACC Limited is engaged in manufacturing of cement and ready mixed concrete. The company's segments include cement and ready mixed concrete. Now, if you were to look at the 1-year chart, you would see that the stock was on an uptrend for the initial part of the year, but since then has been consolidating. The market cap is 32,419.59 crores, which means that the company is a large cap one. The EPS is 40.43, which translates into a price to earnings ratio of 42.70, which is just a little bit lesser expensive than the industry PE of 46.19. The book value is 461.23, which translates into a price to book ratio of 3.74. The dividend yield is 0.98, whereas the promoter holding here is average at 54.53. The 52-week high for the stock stands at 1869.95, whereas the 52-week low for the stock is at 1315. Now, the fourth stock on the list is Mahindra and Mahindra Limited and is currently available at 757.80. The price when this stock was recommended was 745, and the target price here has been set at 850. The code for the company is M&M. Now, Mahindra and Mahindra Limited is engaged in the manufacturing of passenger cars, commercial vehicles and tractors. If you were to look at the 1-year chart for the stock, you would see that the stock has been a wealth creator, but with spurts and falls. Now, there was sort of a inverted head and shoulder pattern round about the middle of the year, and since then the stock has created some money for its shareholders. The market cap is 942.09.13 crores, which means that it's a large cap one. The EPS is 31.65, which translates into a price to earnings ratio of 23.94, which is much below the industry PE of 33.54. The book value is 206.60, which translates into a price to book ratio of 3.67. The dividend yield here is decent at 1.72. The promoter holding, however, is on the lower side at 21.61. The 52-week high is 1571.40, whereas the 52-week low is 736.70. Now, the fifth company on the list and a play on the rural economy is Mahindra and Mahindra Financial Services Limited, and this stock is currently available at 481.80. Now, this stock was recommended when it was at 485, and the target price here has been set at 575. The code for this company is MNMFIN. Now, Mahindra and Mahindra Financial Services Limited is a non-banking financial company, that is an NBFC, and the company serves the financial needs of population residing in rural and semi-urban areas of India. Now, if you were to look at the 1-year chart, you would see that the company has been on a consistent uptrend throughout the year. The market cap is 29,763.92 crores, which means that the company is a large cap one. The EPS is 5.57, which translates into a very expensive price to earnings ratio of 86.50 based on standalone numbers. The industry PE is 46.62, which is again much lower than the company's PE. The book value is 105.02, which translates into a price to book ratio of 4.59. The dividend yield is 0.50. Now, the promoter holding here is average at 51.85. The 52-week high is 512, whereas the 52-week low is 263.30. The penultimate stock on the list is Larsen and Toubro Limited, which is represented by the code LT. Now, the stock is available at 1416.50, and the stock was initially recommended at 1352. The target price for the stock is at 1527. Now, Larsen and Toubro Limited is a technology, engineering, construction, manufacturing and financial services company. Now, if you were to look at the 1-year chart, you would see that some wealth has been created here, and the stock has been on an uptrend, but towards the middle of the year there was some sort of a consolidation. The market cap is 1,98,456.13 crores, which means that the company is a large cap one. The EPS is 27.90, which translates into a price to earnings ratio of 50.77, which is high, but we have got to see it with respect to the quality of the company, and this is a bit more expensive compared to the industry PE of 24.02. But again, as I said, this company is a holder of great value, and hence this sort of a high PE may somewhat be justified. The book value is 290.53, which means that the company is available at an expensive price to book ratio of 4.88. The debt to equity is 2.1253, whereas the return on equity is 0.1383. Now, another factor to mention here is that with an infrastructure company, the debt generally is a bit on the higher side, and here the same case is playing out. The dividend yield percent is 1.48, which is decent. Now, the 52-week high is 1427.05, whereas the 52-week low is 921.31. Now, the final stock on the list and another cement company is UltraTech Cement. Now, this stock is available currently at 4359.95, whereas the stock was recommended when it was at 4543. The target price here has been set at 5350. Code for the company is ULTRACEMCO. Now, UltraTech Cement Limited is engaged in the business of cement and cement related products. The company manufactures a range of products that cater to construction needs from foundation to finish. Now, if you were to look at the 1 year chart, you would see the company began on an uptrend for the initial part of the year, but since then has largely been confined to a range. The market cap is 119,703.26 crores, which means that the company is a large cap one. The EPS is 88.57, which translates into a price to earnings ratio of 49.23, which is a bit more expensive compared to the industry PE of 46.19. The book value is 872, which translates into a price to book ratio of 5. The dividend yield is 0.23, whereas the promoter holding is 62.07 and is average. The 52-week high is at 4599.90, whereas the 52-week low is 3300. Now friends, another factor to mention here is that I would be providing the link to this article on money control in the description. You can go ahead and go through this particular link to understand more about the thought process which is at play here. Also friends, please don't treat any of these as stock recommendations. Please go ahead and do your own research. And this is all what we wanted to show you for today. Thanks for watching, and we will see you soon with another video.